Eric Moore at Mother.com for the weekend market analysis for U.S. markets for July 25th and July 26th, 2015. Let's take a look at how markets closed on Friday. We see pretty much a 1% close on the markets, and the VIX was up about 10%. We see that crude oil was slightly down and gold was also slightly up. For the week, the S&P 500 was down 2.2%. For the week, the Dow was down 2.85%. And for the week, the NASDAQ was down 2.33%. Let's begin by taking a look at a fresh weekly chart for the NASDAQ, and we see that this week it moved back below the previous weekly breakout level. So that seems to be a failed breakout on the weekly, and we can see that it came back and is showing resistance on the line connecting RSI highs. So we moved above this line and back above it, or back below it. With uniform activity, that tends to be a sell signal. So short term, the weekly charts are giving us sell signal as far as the markets are concerned because of this very clear resistance line connecting the highs. Now if you take a look at a 3-year weekly chart for the NASDAQ, we see again here we failed to hold above 51.17, so that's a failed weekly breakout. Now the question is, what does this mean? Is the market going to have to come back and test the previous support line, which, as you can see here, this support line is where the market bounced about 3 weeks ago. So is the market looking to come back and test that line? That's very hard to tell on this daily chart, on the weekly chart. But if you take a look at the daily for the NASDAQ, you see that number one, we had a relatively big down day. Why? Because the daily RSI for the NASDAQ moved below 50, closing at 49.60. And what that means is that you get a down day when you move below 50, but now the risk is maybe the market can get a snapback move back above 50 in the coming week, or maybe the beginning part of next week. So if it can bounce back above 50, expect a reversal day to the upside. Keep in mind, the NASDAQ is back testing here its 50-day moving average. So if it can hold, if it can bounce back above the 50 level daily RSI, expect a bounce. Now there are a couple of things to consider here. Number one, if you take a previous line that we had been considering and extend that line like that, you can see that it gives us the previous lows going back to late 2014 and for most of this year here. So the market has recaptured the level back above the blue line, is coming back here. If this becomes support and starts trickling higher, that would be indication that the market is actually looking to bounce. Now the true test is when the market comes back, if it chooses to do so, to this line here on the daily. This is where it's been holding support going back about 2 years. If it comes here and shows support, maybe we expect a bounce, but for now we haven't come as close to testing this green line. But this would be the line where we would have to watch for support or break. Right now we are trading between resistance. As you can see, if you take the highs on the daily for the NASDAQ, those of us who are watching this line during the week noticed that the NASDAQ had rallied back to the line connecting the recent RSI high. So once we hit that line, some of us were expecting a pullback, and that's what we got over the last 2 days or so. Also take a look at this line connecting the resistance line. So there's also another line right here where the market has been stalling. So as you can see, store that line there. So market's been stalling on this level. If you take this high, corresponds with this high. These highs here correspond to the short-term highs, and the high here corresponds with the resistance on the red line. And here we went above the red line and back below it. That's uniform action, which gave us this short-term sell signal. So the market gave us a short-term sell signal. Now we have to see where the next swing trade is going to be, and throughout the course of this video analysis, I'll point you to what I think could be happening next. If we take a look at the Dow Weekly, we see that the Dow had a relatively big up relatively big down week, so down week. And the reason I would try and explain is because the weekly RSI slashed below 50. So as you move below 50, you get a big down week. As you move above 50, you get a big up week. Now the question becomes what the market is going to do around this level. Keep in mind that there is a line connecting RSI lows going back to 2012. If you extend it like that, you can see the market has bounced on this line for a number of times here over the last 2-3 years. The fact that we've come back to test that line suggests that this is what we should be looking for in the coming week, either for this line to hold and the market bounces, or we start trading below that line, suggesting that we are entering a new phase. Keep in mind that if you take a look at a fresh weekly chart for the Dow, and here I have a 1 year weekly chart, so 1 year weekly chart for the Dow, we can see that we closed below recent weekly closing lows. So that is not a good sign. As long as the market is trading at fresh weekly lows, that's not a good sign. So we need to watch for this if the market is still struggling to hold above that level there. And the level to watch is 17,730.11, which happens to be this weekly closing low. As long as the market is trading below that price, indication could be that the market is looking to point down. So that's what I would watch, that 17,730, which is this recent weekly closing low from about 4 weeks ago. If the market stays below that, expect the market to be back on a pullback mode. If it can recapture back above that level, then maybe it is trying to build after this recent pullback. Take a look at the Dow Daily, and on the Dow Daily we see that we had come back during the week to this top side line connecting recent RSI highs on the daily, and once the market hit that line there, we were expecting a pullback, and we got a pullback on the Dow. And also keep in mind that there was also another line that we've been discussing, which is right there where the market has been stalling. You can see off the highs here, the market had broken down right there, and since then this is where the market has been stalling, even here. And also we see that we stalled exactly on that red line during this rally attempt. Now we are back to a level where the market could find support, and this is actually a good reason to suspect the market could bounce. If this line holds, then if this line can hold and the market start showing support on that RSI line, expect a bounce in the market. Otherwise, if the market does not hold and we break below that, so if we break below that line, then that would suggest that this market is due for another continued push lower. There's also that's one line. The other line that we've been watching over the last 2-3 years is now coming to play again. So this green line here is where the market has been bouncing, and if you take a look at the major corrections over the last 1 year or so, this drop here during this pullback, the market held uniform activity below the green line and back above it during this period here, which was this re-entry there. Uniform activity below the green line and back above it for this re-entry. Support with uniform activity here back above the green line for that re-entry, and on and on. So this is where the market has been seeing support over the last 2-3 years, and we see that now it's coming. Even these recent lows here came exactly with a double bottom support right there. If this is confirmed as support on the green line, expect the markets to be on recovery mode. Now let's take a look at the Dow Transports. You can see here we are closing at a fresh 2015 weekly closing low, so that's another break. And the level to watch there, as long as the Dow Transports are trading below that previous recent weekly closing low, and the level to watch there is 8,122.50. Trading below that is bearish. Keep in mind that we had talked about this crossover between the 13-week moving average undercutting the 34-week moving average, which tends to be, generally speaking, a bearish signal. So this market, as far as the transports are concerned, has been acting a little bit on the bearish side. Keep in mind they made their highs late last year, about November, and since then this market has slowly been moving to fresh lows on a weekly chart. So this is a 1 year weekly showing that this is breaking down. The level to watch again is this 8,122.50 level. Anything below that is bearish. At the same time, if you take a look at a 5-year weekly chart, you can see that off the lows during this pullback here in 2011, the market had moved above that RSI level and went on a nice run over the next couple of years. So this nice move here began during this period here. So we can draw a line from there, which is exactly where the market is coming to test. So you can see that the market has come to this level once, a couple of times before. Let me see, a couple of times here it bounced on the green line. So let me draw that green line so you can see it clearly. It bounced close to this green line here during this period, which was the lows there. It came close to touching that green line, which was the lows there. And now we are trading around that level. If this level holds, despite and in spite of this bearish looking chart, this could actually be a level where it can bounce. Otherwise, if we cannot hold above that level and we trade below the green line, that would indicate that definitely we have entered into a bear market in terms of this Dow Transports chart. If you take a look at the daily for the Dow Transports, you can see that over the last couple of months it's been stalling and failing to hold a downward declining 50-day moving average. So this is the 50-day moving average, and you can see that it has been showing a lot of resistance and has not been able to move above the 50-day moving average, which is pointing down, indicating that generally speaking prices are looking to trade lower. So the 50-day moving average has become resistance, and again there's a short-term resistance line if you draw the line connecting the tops. And those of us who are watching this line during the week were sensitized by the idea that the market had come back above and to this line here and was showing a test. So once the test failed, indication was that this market was going to pull back. So once this was confirmed as resistance during the week, we were expecting a pullback, and we did get a pullback in the Dow Transports. So now the question becomes whether it's going to be able to hold this line of support. This RSI line is where it has been bouncing with success. So if that can hold, that's good. Otherwise, if we break below that line, and also if we break this line connecting RSI lows, if we break the green and the blue line, expect this market to track lower. So that's the key here, is just depends on how the markets are going to respond. Are we going to get support now that it's coming back to these two lines? Line number 1 might offer support, and also line number 2 here might offer support. If either of those two lines offer support, expect this to hold. Otherwise, a break of those two lines again would be bearish. Let's take a look at the S&P 500, which failed to break out above the recent weekly closing high of 2121.26. So that breakout failed, which was about last week there, and now we are below that. So that's a failed breakout. Failed breakouts are notorious for taking markets lower. If you draw a line connecting RSI highs like that, you can see that this is where it hit this coming into this week. That was resistance. Again, we also closed below 50 for the week, which might explain the big down week. Keep in mind, in the coming week, if the market chooses to, it can actually bounce back above 50 for another strong move, only that this time it will be to the upside. As you move above 50, you get a big upswing. As you move below 50 on the weekly RSI, you get a big down move in the market. So if you go back to about 2013, you'll see that the market has been bouncing around the 50 level on the weekly RSI. Every time the market would come close to the 50 and hold, it goes on to new highs. You had uniform activity below 50, back above it, which was doing this pullback here. The market touched 50 here and moved higher late January, and that pushed the market to new highs. And we recently bounced at the 50, which was this lows there, and now we are coming to test the 50 level on the weekly RSI. If the market can hold above 50, then it should be able to recover. For now, the jury is out as to whether that is going to hold. For now, we see that we have resistance on the top side, and we have the possibility of holding the 50 level on the weekly for the S&P 500. So I'm not sure which way it wants to pick, but keep in mind, the week it moves above 50, you'd rather be long as opposed to trying to be short. That's why, because the Dow moved below 50 this week, I was expecting and telling subscribers there was no need to be looking for long opportunities, because once the Dow moved below 50 during the week, the suggestion was the market would be down into the close of the week, which is exactly what happened. Take a look at the S&P 500 daily. For today, we see the S&P 500 crack below 50, which might explain the big down day, just like the NASDAQ. Now the question becomes as to whether this blue line is going to be support. Keep in mind this line was support with double bottom support here during this pullback back to the 200-day moving average. So that blue line could be support again, maybe, we shall see. Or, so either this is going to be support on the daily, or the market has a chance of testing the previous RSI lows line like that. And you can see that the market has been using this green line to bounce on the RSI. Uniform activity below the green line, back above it for a nice re-entry there late about October of last year. Support here with uniform activity back above the green line, nice re-entry there. Support on the line here, nice re-entry. Support on the line, nice re-entry. Support on the line, and then again nice re-entry. Double bottom support on the line, green line, nice re-entry. So it depends on whether the market moves back to test these two lines. If they hold good, if they crack, then we're in a different market. Take a look at the S&P 500, and we see that we broke below the line where the market has been bouncing. So this RSI line has been where the market has been holding. We are trading below that. I think that indicates that even short term, this market is still continuing to be suspect. We also see that the MACDs are both below zero, and as long as the MACDs are both below zero, the indication is that this market has a lot to prove before it can recover. So with both MACDs below zero, that's never a good sign short term. If you are looking for a reason to be bullish, this is the best reason I can find. And the reason why I say that is because once if you take a look at the VIX Hourly, and here I'm using RSI period of 26. So RSI period of 26, you can see that the VIX has been stalling at this red line, and we've been talking about this over the last couple of years. Every time the VIX hits this level, the market is a play, or at least the market moves higher. We went above the red line and back below it with uniform activity there, which was this high. We came here and could not move above the red line, which gave us this top recently on the VIX and a buy signal for the market. We can see short term, as of right now into the close of the week, the VIX seems to be giving us a sell signal, which means that on an hour-to-hour basis, the market by itself is giving us a buy signal. Take a look at the VIX from 6 months. This is 3 months of data. Let's go to 6 months data on the hourly. Same RSI period, and you can see that actually take a 6 months, 9 months view, 9 months view for the VIX. So let me not confuse you. So this is 9 months of data for the VIX and RSI period of 26. What I'm going to do is draw a line connecting the recent or previous RSI highs like that, and you can see that other than this period here where the market went above the blue line and back below it with uniform activity, the market has been stalling during these highs here. So the line connecting the highs, and what I'm getting at here is we also seem to be showing short-term resistance on the line there. I think that to me indicates more than likely the VIX is trying to tell us that as long as the VIX is struggling to hold above this line here, as long as the VIX is struggling to hold above that line, the market could bounce. Otherwise, be careful here in making strong conclusions, because if the VIX can take out that resistance line, then the market could actually be in trouble. Right now, if I was to be neutral, the VIX is telling me that hour to hour, the market wants to move higher. Let's take a look at Apple, and on the weekly, had about a 4% drop. But I don't think it's that bad of a chart, because if you take a look at the weekly chart, you can see clearly here that it's been bouncing at the 50 level. So the stock has been coming here to the 50 level and showing support and bouncing higher to new highs. Support at the 50 level, and bouncing to new highs. It also found support here, bounced to new highs. It touched the 50 again there, bounced to new highs, and now it's back testing the 50 level. If it continues holding around the 50, I would suspect that it actually looks good. The reason that it's still holding above 50 indicates to me that it is still on a nice bullish run. You can see it's been trading above 50 for the last couple of years, and as long as that's the case, the stock should be okay. Take a look at the hourly, and on the hourly we see that it is still above the line of support. As you can see, the stock has been bouncing on this green line, even off the lows here. They held on that green line, and recently during that one-day plunge it held there, which was during these lows here. So I think the hourly looks okay in my opinion. Nothing has really changed that much, and again, the key here, if you want to simplify this, is if the stock can continue holding weekly RSI above 50, the market should be okay. Otherwise, if it breaks the line connecting RSI lows, so if that line breaks and this line connects recent RSI lows, if that breaks, then you have to be a little bit cautious to the downside. For now, I think it closed the week relatively okay. In conclusion, let's take a look at the monthly charts. We can see that the monthly for the S&P 500 failed. It failed to hold above the breakout level, and the level we were watching there was 2107.39, so that's a failed breakout. And the fact that the RSI on the monthly is trading below 69.1 suggests that it's now an open discussion as to whether it can go down. When the markets are trading above 69.1, then really it's very tough to make an argument that the markets are bearish. You can see even during this phase the market had a nice run during this period when it was trading above 69.1. So for now, I'm curious as to which way this can go. So we have to be careful here. Number one, the monthly breakout failed, so we have to be open to all possibilities. Take a look at the NASDAQ. Now, fortunately for those who want the market to go higher, the market, as far as the NASDAQ is concerned, has been trading above 69.1 for more than 2 years. Since about March of 2013 here, the market has been trading with its monthly RSI above 69.1, and that continues to be the case. The one thing we can watch is to see whether the NASDAQ can continue breaking out. Right now that breakout looks to be a little bit suspect. It needs to hold above the previous monthly closing highs, and the level to watch there for the NASDAQ is 5070.03. So 5070.03. If it can hold above that, then it's breaking out on the monthly. Otherwise, if it cannot hold above that, then the indication is that probably the breakout has failed and it could go lower. Actually, the worst looking chart in terms of the way the chart is setting up is the Dow. And the reason why I say that is the Dow is probably the closest market on the major averages that we follow that is about to move to 3-year lows. Now, if the Dow moves to 3-year lows here on the RSI, so we're talking about 3-year lows, that would be very, very bearish. So we need to watch this. If it cracks to 3-year lows, you definitely have to be looking to be bearish, or at least expect the market to go lower. We also see that at least one of the MACDs, as far as the Dow is concerned, is already trading at 3-year lows. So that sets up the market that could go lower. So this move to 3-year lows on the MACD, and also the potential that the Dow at any point now, with a little bit of a slide and a push lower, could be cracking to 3-year lows. That's the worst type of bearish signal that you can get in a market. So the risk is that that could take place and the markets could go into a major bear market. Eric Muadh, Muadh.com. We'll see how the week begins. Otherwise, more than likely, if the markets can recover this coming week, it might be a big up week because the S&P 500. So let me show that. S&P 500 closed a tad just below 50 on its weekly RSI. So for the week, just be aware that if you see that the S&P 500 is moving above 50, that would indicate a recovery week, maybe even a strong week. Otherwise, if it stays below 50, suggests that the market is not looking to bounce, at least in the short term. Eric Muathe@muathe.com. Enjoy your weekend. Good luck, peace, and blessings. ERCS. I am out. Talk to you guys later. Mwah.